Hello everyone. Today I'm going to talk about Domino stock valuation and how I successfully predicted a 30% decrease in Domino stock. And this value is going to be very short. In 2024, I finished my first stock valuation, and I mentioned that the stock has been overvalued. Interestingly, right after I post my analysis, Warren Buffett announced to buy the stocks. Although I have been confident in my valuation, but for the most successful investor in the world, I cannot have to double check my valuation, right? So I double check, but I found that the Domino stock is even more overvalued than my estimation. So you can tell that in 1 and 2 years ago, I estimate the value per share to buy the Domino stock is about 387 to 314. After the news that Warren Buffett bought the stock has temporarily increased to close to 500, but has decreased to 313 today. So in this video, I will explain how I reached the valuation, the price in very short video, and I will also explain why Warren Buffett probably make mistakes, but not necessarily. The business model are how business generate revenues, profit, make reinvestment. And this is a domino business model. Domino major have three revenue streams. The first are domino stocks owned by the company, but the company only own a little bit in the US. The second is a major revenue stream for the company, which is when other company have franchise under the Domino name, they need to pay a certain amount of their revenues rather than profit to Domino. That is a huge strength. Suppose that you are a franchise and you generate 100 million revenues. Even if you only have 5 million profit, you still have to pay Domino based on that 100 million multiplied by a agreed rate in the financial report. And the third is the supply chain. The Domino also supply those doughs, sausage for all the Domino restaurant. So such a business model really can help the Domino's generate a strong cash flow. So my idea is if I can see how the most successful fast food restaurant, how high their revenues can achieve in the history, then I can estimate the Domino's future. I'm not saying that Domino can be the most successful, but I can see how high they can go to have some ballpark. And here, I collect the information for over 50 fast food restaurants annual revenue growth in the past 20 years. But of course, not all of those companies have 20 years history, but those including several big names such as McDonald's, KFC, Chipotle, etc. And here it shows you the international revenue growth for each franchise for those brands. But you also know that the revenue growth for fast food in the US and internationally will be very different because for many developing countries, eating McDonald's or KFC can even be a luxury. But the McDonald's or other fast food, they are cheap food in the US. So I also collect information about the annual revenue growth distribution for fast food in the US. And then my next step is I see how many revenue growth for Domino's franchise have right now, and that gradually increase to this different growth rate, then I can estimate Domino value, right? So as you can see here it shows that for the retail sales for all the franchise for the Domino in the US, the revenue growth in 2025 is about 4%, and globally it's about 10%. And then I gradually increase to this distribution. And after I do that, I can see how much revenues those franchise can generate. And I use that to multiply by the agreed percentage between Domino and its franchise. So I can know how many franchise fees the company can get that. Another thing is I will get the supply chain revenue. As we can see here, the supply chain revenue in the history to divide it by the total retail sale to get a ratio. If you have read my previous post or watched my previous video, you know that I really don't like the idea to use historical data because what happened in the past does not predict future. But here I'm feeling okay with doing that because the supply chain is so intertwined with the sales because literally you sell one pizza and you just pay extra one pizza money for the supply chain, right? So after I do all of them, I can estimate the revenue and profit for Domino. And after that, I will also subtract those NOWC, which are daily operation expense and the capital expenditure. After doing all of them, I can estimate Domino value per share based on different scenario. And as you can see here, for the US annual growth rate, we have 7% and 18%, which is here. It has 30%. I don't think that is likely. And here we also have the hedges international annual retail growth. And after doing all of them, I got the median value per share for Domino at around 429. But after seeing that, I found that there's something we need to consider, right? Because in a sample of data, the extreme data will largely affect the total, the average and median of the numbers. What I mean by that is if you want to calculate the average income for California, if you're including or not including Mark Zuckerberg or Bill Gates, the number will be so different. So what I do is I remove this 40% scenario. The value per shares is about 363. But another thing is, although we have this high revenue growth prediction, you can see that the Domino has performed much poorly than those numbers in the most recent year. So if I just take that into account, the value per share is about $307. And this is the number I have in 2024, expecting that the Domino will keep growing internationally. But what happened in the past 2 years is a trade war. And I also sense that there's an anti-globalization. So then the next I will do is, if I take that into account, the value per share is about $418. And excluding extreme cases, is $350 and $300. And I did buy the shares at around $350. And I will buy more if the stock decreases under $300. And let's come back to the Warren Buffett. So why Warren Buffett bought the stock at this moment? I think there are two at that moment. I think there are two possibilities. The first is our behaviors are all affected by the time we grow up. If you think about when the Warren Buffett started to invest, most of companies in the US are manufacturing companies. So Warren Buffett really liked those companies, like Domino's. You literally sell the pizza and he will feel more stable. That's the first possibility. But there's another possibility, and I think it's more likely. Another possibility is Warren Buffett. It is not Warren Buffett who bought stock, because Warren Buffett literally told the world 2 or 3 years ago that he has stopped managing the Berkshire shares. But you wonder why people still flowing to the flowing to the stock whenever there's news that Warren Buffett buy it. Well, because those financial institutions or investment bank, they are good at selling the news. I believe that they must also know that Warren Buffett have announced that he will not pick stock for Berkshire shares anymore, and that has been on the public news. But they still use such news to fuel the sentiment, to ignite the market. So for people who buy stock, it's really important to know what you are buying. Imagine that you are an individual investor and you hear the news in 2024 and you bought stock at 430. Then what are you going to do? You will say, oh, maybe I will sell it when it go to 499. But do we really do that? Trust me, most of us will not do that, right? If it go to 490, we will say, oh, it's going to go even higher. But when it decrease, we don't know what to do. We just say, okay, we probably just leave there and probably the stock will go up later. But then it decreases more, we finally give up. This happens to most of us. So it's always important to know what you're buying and keep updating. So this is my short Domino stock valuation. Feel free to leave a comment and ask question. And if you like my video, I hope you just watch the whole video because that's most helpful for me on the YouTube. And thank you very much and have a nice day.